Hi and welcome to the channel. Today we are going to analyze Johnson & Johnson. First, we'll find out the dividend score, and after that we'll check the valuation with the help of fast graphs. They have a market cap of $433 billion, current stock price is 165.27, and they are operating in the healthcare industry. During the last 10 years, they have performed extremely similar to the S&P 500. I think they have underperformed by just a bit actually, and this is with the dividends reinvested. Now for some financial data. First off, the sales the past 5 years has been 3%. That's an X, we want a bit higher than that. And the earnings per share the past 5 years has been 5.5%. And the estimates of the earnings is 5.7%. The return on capital though is up there at 14.22%, really strong. And the debt compared to the free cash flow they are generating is only 1.63 years. So they have extremely low debt compared to the cash they are bringing in. Now for some yield data. A nice dividend yield of 2.75%, and they bought back only 0.13% last year. It's a positive buyback yield though, they are at least not issuing new shares. The payout ratio of the dividend is 43%, and the dividend growth rate the past 5 years has been about 6%. And this is a dividend king. They have been growing the dividend for 59 consecutive years. And all in all, this makes up for 7 out of 10 points, with a very strong dividend scorecard, but a bit weaker on the growth of the company for sales and earnings. And that's not surprising with this large of company. Now let's check the valuation in fast graphs. Here we have Johnson & Johnson, and this orange line is the earnings, and they fared very well during the recession 2008-2009. Healthcare isn't that affected by economical crisis. But of course they dipped down a bit during the last disease, but have picked up right again. They are not growing the earnings extremely fast though, only about 6.12%. Johnson & Johnson has a credit rating of AAA though. I think it's only Johnson & Johnson and Microsoft that has that. If we also plot the price compared to the normal PE, which the stock trades at, we can see that it has been overvalued for quite some time, but is dipping down now, so now might actually be a good time to add into this dividend king for stable dividend income. If we project out to late 2024, we can expect the annual rate of return of about 5.6%. Please hit the like button and watch my latest video right here about 5 brand new stocks I bought for my portfolio. See you soon!